How's it going, guys? Welcome back to Investing with Zeke. Please like and subscribe. Today, we're going to go a little bit over the bull case scenario on why we think stocks will continue to grow. This is Carolyn Woods. She's with Schwab, and I actually invest with Schwab. My serious investments, my mess around stuff is all on Robinhood. But I really like going to these guys as a good news source. They do get kind of into detail a little bit, and it's better for her to explain the detail than me, and then I'll kind of come in and finish with where I think the market will go towards the end of the year. It doesn't even matter anyway unless you plan on dying at the end of the year, but people want to know. People want to feel a little bit good about themselves, and this video might help you. So and we might even have to look at what stock's doing in the pre-market just to see if what she's saying holds true. But this is her bull case scenario. She's bringing on a couple other analysts to prove her point on why she thinks it's going to be a soft landing and the Fed's done hiking. Like, really, Carolyn? Really? All right. Let's hear what she has to say. We'll give my opinion afterwards.
For the big picture, for that, let's welcome in the team from Charles Schwab. Nathan Peterson is Director of Derivatives Analysis at Schwab Center for Financial Research, and Cooper Howard is Director and Fixed Income Strategist for the Schwab Center for Financial Research. Nate, Cooper, great to have you both here with us. Nate, let's start with you. Stocks really struggling to find direction today. Dow, NASDAQ, and S&P all just barely positive, but it is a losing week for stocks. When it comes to technicals, what specific levels are you looking at? What stands out to you from a technical point of view?
Right. Hey, afternoon, Caroline. So normally, you look at that 50 SMA and say, well, we've kind of been backing off that today. The NASDAQ 100 was above the 50. It's pulled back. The candle's looking kind of weak. But honestly, I think that what's more important is that, number one, the 4,600 level that we backed off of, that resistance level in late July, and then 4,350 is a level where we found buyers both in mid-August and back in mid-June. And I think those are really the more important levels. The 50 SMA on some of these has begun to kind of gone a little bit more sideways. So when you're in an uptrend and you break one of these moving averages to the downside with a significant breach, that can be more significant than when you're kind of chopping sideways and looking for direction. And right now it feels like we're in one of those periods where we have, bearish seasonality in front of us. There's not a lot of catalysts. We're out of earnings season. We do have CPI and PPI next week. Maybe that could provide some direction one way or the other, but I will say oil prices have been pretty hot, and I'm just wondering how that's going to affect next week's reports.
All right, we'll talk more about that report in just a second. But Cooper, just in terms of rates, investors obviously have been very focused on rates, not just this week, but overall, really over the past month or so. We did see a tick lower in the 10-year yield today, but what's your key takeaway from this week in terms of the rate action that you saw?
Yeah, I think the big key takeaway was all the Fed speak that we heard this week. There was quite a bit of it, so you really had to open up your ears to hear a lot of what they were saying. But I think really if we take all of in culmination of kind of what they had said, is that I think that they're relatively satisfied with where the direction of the economy is going and where the direction for inflation is going. Now, the job likely isn't done, so I think that what that means in terms of the Fed function is what is going to be the next step. I don't anticipate another rate hike during this cycle, barring a major surprise in either inflation or in the labor market picture. But I think that it's looking forward to seeing how long are they going to continue to hold rates at these elevated levels. So I think that that was kind of the big story of this week, all the Fed speak that we really heard from.
So Nathan, if stocks are going to continue to trade on rates and Cooper says the rate hike cycle might be done, what does that mean for where stocks go from here?
Well, if you look at the 10-year, we're still in an uptrend, and we're basically about 10 basis points away from that new cycle high at 4.36%. And we also know that some of the ascent here in the bond yields has been to the higher for longer thesis because of the stronger than expected inflationary data. It's also been a little bit from the high treasury issuance that's been out there. So even if inflation does cooperate, as it has been in terms of its deceleration, it seems like there's some other factors out there that potentially can be pushing to higher yields. Now, I'm not suggesting that they're ready to just take off, but I am suggesting that if the 10-year does continue in its uptrend and makes a new cycle high, it's hard for me to see how that's going to be bullish for stocks.
Okay. And Cooper, let's really kind of home in on next week's CPI report, because that, of course, will be the highlight. We also have PPI. We also have retail sales, weekly jobless claims, I'm sure will be closely watched. But in terms of CPI, what specifically should we expect?
I think what we should expect is if we look at the core number, it's going to continue, it's expected to move a little bit lower than where it was the prior month. However, it is still elevated for what the Fed is looking at. So if we look at kind of how to break down rates, I look at it as kind of as a math puzzle. So there's multiple different pieces to it. You can look at a Fed funds rate combined with the outlook for inflation, the outlook for growth, and kind of build on top of that, maybe a little bit of a fudge factor, if you will. And so if we look at what inflation could actually mean for what the Fed might do, I think like Nate was saying, really it's the story about the higher for longer and how long are they going to continue to hold it. Now, given that it's likely that the rate of inflation will continue to move lower, I don't expect that that will change the direction of the Treasury in the near term. Now, if there was a surprise to one side or another, then yes, that could give us some direction for a higher yield. But longer term, what we're actually expecting for the direction of interest rates is I would not be surprised if longer term yields continue, if they move lower from here. So what that means for our investors, what we've been suggesting for them to do is we've been suggesting take advantage of this recent move up in yields, lock in longer term yields and extend duration. One strategy to do that we still follow through with is a ladder that can be beneficial for long-term investors.
All right, we have to leave it there. Cooper Howard, Nathan Peterson, both from the Schwab Center for Financial Research. Thanks for giving us.
All right, guys. So they really believe that the Fed's done. My opinion on it, it really doesn't matter, but, it's good to know kind of where the direction of the market is. But, guys, we're still in war. Things are still expensive. Not that they're going to drop. I get that. But we're just not, it doesn't feel like we're in a really good place right now for stocks to go to the moon. And it's not set up. But I do believe, during next year, election, all of that, rates are going to start coming down. Right now, gas is high. I mean, and if you go and actually look, I look at a lot of individual stocks throughout the whole week, and I pay attention to volume. A lot of the volume has been going into the cannabis sector because they're starting to ease laws in the federally with cannabis. So that's why you're seeing a big spike in cannabis. I have no idea why nobody's even talking about it, but I guess it is what it is. But I think it was 2 weeks ago, they brought a proposal to the Fed, and the Fed's thinking about changing it. And it could happen really quickly, and you don't even know when it'll happen. And the second it legalizes federally, a lot of money is going to go into that industry, the MJ space, and it's gonna be crazy. That's why I have a position over there. I watch it like a hawk because you know how they move, but that's the volume is over in that sector. What I'm seeing, I mean, I've been seeing times when Facebook was opening under a million shares, traded. That's kind of crazy. That's pretty low. Palantir's been pretty steady into their, with their volume range. It's just hard to get excited for Palantir when there's been stuff coming out with NVIDIA. I'll get into that in another video. But as far, we have a bad September's always bad. Then they start talking about the Santa Claus rally, which gets us all hyper and excited. And you know what happens? There's never a Santa Claus rally. I wonder who made that up. All right, so a lot of times people are selling into Christmas because of either getting money or just being able to tax lost harvest. not really going to be able to do that this year, but I had a pretty bad last year that I'm able to still harvest at least $3,000 from. But I mean, the Fed hasn't lied. I think when do you think they're going to cut rates? A couple of months before election. That's when they're going to start cutting rates. Maybe a little sooner, but there's no reason to do it by the end of the year if that's what people are expecting. We have high oil, we have low volume. It's September. There's still a war going on, and we're not close enough to election. That's pretty much what it comes down to. And besides, next week's a big week, so a lot of money got pulled out last week because they're waiting for the PPI and CPI and all that. So, which I'll be paying attention to, but yeah, I believe we're just still in that buy the big dip moment where when you see weakened stocks, you buy them. That's what I'm doing. But anyway, like and subscribe, and I'll catch you on the next one.